All right, good morning, everybody. Happy Monday. It has been a chaotic weekend, to say the least, with the Silicon Valley Bank news and the government, the Treasury, ended up bailing them out. But this ended up somehow not being bullish. Turns out that bailing out banks isn't a bullish moment for the stock market, with the VIX currently trading at $29.56, so we're closing in on that 30 mark. We were slightly above that this morning at 30.81, so hence the title, VIX over 30. And SPY has managed its way down from 386-ish at close on Friday to currently 381.56. So we're approaching that $380 Fibonacci retracement that I was talking about in my latest video. Came out yesterday, so go check that out. Gives my weekly analysis of stocks that I'm watching: Adobe, FedEx, how I'm feeling for those stocks. So go check it out when you get the chance. But currently SPY is down 1%, and this is after SPY was actually up in the pre-market by about 1.7%. If you look at the SPX futures, this was as high as almost 39.80, 39.71, and now it's trading at 38.55. So this is below the mother of all trend lines, and this is coming down to that 3,800 level, or 380 for SPY, for the Fibonacci retracement, going from the bottom of COVID to the top of the bull market. So it's going to be a critical support level. Definitely one to watch out for. And the price level that I have both long and short options on. So put debit spreads this morning on Troist. I think that banks still could be a decent short, even with the... I'm just getting a ton of notifications right now. Jesus Christ. Like, there's so many stocks on my watch list that are at new 52-week lows that I'm getting notifications for. It's insane. But, yeah, I still think that banks could be in some trouble because it's not the banks themselves that are getting bailed out. So what the Fed said is that they're not bailing out the bondholders of the banks. They're not bailing out the shareholders of the banks. They're only bailing out the people that are holding their cash in the banks. So the banks can go to shit, basically, is what the Treasury ended up saying. Good morning, Kamala. Good morning, Nice Fishman. Good morning, Peter. Hello, everybody. Roku is currently down by 5.7%. This is something I also talked about in the weekly video. They had $500 million left in SVB, but they're going to get bailed out, so they're going to get all their money back. I'm not sure if it takes if it's a long processing time or not. That's something that I would have to look into, but yeah, it's been a pretty rough pre-market, to say the least. But if we head on over to the Robinhood, my account is currently up 300 again, with VIX going up. That helps me out. I do have some put debit spreads, assuming that SPY is going to be below 380 in April, and then I also have some put credit spreads, assuming SPY is going to be above 380 in a couple of days on March 15th. So I've got to go in both ways. So that'll help me out. And then I've got the gold leaps option, which gold is currently up by 1.6%. So this is something that you'll see in times of a recession. Gold will usually outperform. People are, too scared to hold on to the dollar, and banks, if they go insolvent. So they'll move their money over to gold or other precious metals like silver, and things like that. And even Bitcoin is catching a bit recently. I think trading around 22,000. Yeah, 22,300. So even Bitcoin is doing pretty well considering everything going on in the stock market. And then if you look at Charles Schwab, one of the big banks, is actually down a good 10% this morning. Shit, actually 18% this morning. Jesus Christ, that's kind of insane. I wonder if they're getting halted. It showed that It was kind of darkened on the screen, so I wonder if this one... Oh, shit. Charles Schwab actually got halted, it looks like. Trading at 47.72 and not moving a bit. That's troubling. All right, well, what other banks are halted right now? Let's check out KRE. So this is the regional bank ETF. This one's down by 12% this morning, 12.8%. So again, even with the bailout, this isn't bullish for banks. And kind of looks like this one could be halted too. This is a nutty market for sure. No, this one's back on 44.02. It did change. Just took a minute. It's all my fault. Why would I do this? It's the VIX, man. The VIX is at 30. Thoughts on put debit spreads? Yeah. So banks, I still think you could get some profits out of them. Really depends on which one you choose. There's some that are, a little bit higher price than they should be than others. So you could get some more profits out of some banks than others. Let's see. Choice is down by 15%. Jesus Christ. Thoughts on SPY going up today? I think after this news, no, I don't think that we're going to get a bullish day for today. I do think that it's possible that we get a bullish day tomorrow with the CPI report, but part of the reason why we're going down today is because everybody is buying up bonds. So what we're seeing basically is a liquidation out of these banks, and people are instead putting their money into treasury bonds. So if you look at the 10-year treasury rate, this is down from 3.7 to currently 3.49. So people would rather put their money into treasuries, even long-term treasuries, than they would into bank accounts. So that's pretty telling to you. So if you see treasury rates starting to come down, that means that people are buying into treasury bonds. There's more demand for them. So the payout for the treasury bond is going to come down. The yield comes down. So these have an inverse relationship with one another. Another critical point that I saw this morning was the 2-10 yield. So this is the difference between the 2-year treasury yield and the 10-year treasury yield. And this has been inverted the most that it's ever been since, I think, 1981. Right? It was down, I think, 100 basis points or like 105 basis points. And now this has actually started to go less negative to currently negative 0.6. So this is the steepening of the 2-10 yield curve, which is usually the start to a recession. Once you see this going positive, so once this reads above 0, that's usually when the recession begins. Sometimes there can be a lag of like 6 to 9 months, but that's usually when the recession kicks in. Right? This means that more people are piling into short-term treasuries in order to get that higher yield. So that flattens out the yield curve. Right? So the 2-year and the 10-year would be paying the same if this is at 0, but right now the 2-year is paying 0.6% more. Can you explain for the viewers that may not understand what is going on with the banks? Yeah, so basically people are pulling their money out of banks and then putting that into treasury yields because people think that banks are still insolvent, even though the Treasury has said that they're going to back up the depositors. I'm not really sure how long it would take for them to back up the depositors. So you might, be sitting for months and not get your money back until, the Treasury clears that out. But yeah, it's been a pretty chaotic weekend for the banks, to say the least. And how was this able to happen? So the reason why this bank crisis happened was Silicon Valley Bank. What they did was they were buying up treasuries a few years back to get, the 1.7% yield, I think it was, for the 10-year at the time, because they want to get, a little bit of cash inflow. And then they pay off their depositors, like 0.01% or something like that, right? Like Chase Bank only pays you like 0.1% or something like that. I don't know what the rate is right now, but it's definitely low. So they were, getting the yields from these 10 years, but the problem is the interest rates, a few years ago were so low, and then whenever the yields started to go up, the price of those bonds started to come down. So you have available for sale bonds, AFS, and then you have held to maturity bonds. So held to maturity, you don't really need to worry about the losses for, but with the AFS available for sale, you can take realized losses for those bonds. So basically, they had $21 billion of bonds, and of those bonds, I think they ended up losing $2 billion worth. And what they did to make up for that loss was they tried to sell off their shares. It was a $1.75 billion share offering. And then you had Peter Thiel coming in on Twitter, I think the next day or the day of, saying that he was going to pull all of his money out of SVB and that everybody else should follow along, right? So you had a bank run for SVB, and that kind of spread all throughout Twitter. Everybody was talking about it for, basically that was my entire feed for 2 days. So, yeah. So people are afraid of, the banks getting run, even though the deposits are secured by the Treasury now. And then people are instead putting their money into Treasury bonds and into gold at the moment, currently up by 2% this morning at 177. So for me, I was at the right place at the right time. I ended up shorting banks with Leap's put options for Bank of America. I already got out of those. I probably could have made more this morning. Bank of America's down another 6%, 7%, down to 28. So kind of wish I held those, but I did hold on to my Gold Leaps call options, currently trading at 177, and the Leaps that I bought, they ought to be doing okay this morning. Yeah, currently up by 500. The Gold Leaps that I bought are up 150. And then I do have some VIX shares, which are trading around 680, currently up by 13%. So, doing okay this morning. The regular VIX is currently trading at 30.36, so there's a lot of fear in the market right now. Rightfully so, if people are pulling their money out of banks and putting it into Treasury bonds. And SPY is currently trading at 381. So, right at that Fibonacci retracement from the COVID lows. Troy's down 20%. Do you think it could be halted? I mean, I've seen a lot of banks being halted last. I mean, you saw, what was it? Schwab was halted when it was down 15, 20%. So, yeah, I think that Troy's could end up getting halted too. But we'll see. SPY is currently down 1.3%. It would be crazy if we ended up getting a, circuit breaker, but I'm still doubtful that we'll get a circuit breaker anytime soon. If we do, either the circuit breaker would hit whenever CPI comes out tomorrow, even if it comes in a lot higher than expectations, and if the Fed has to raise rates more in the face of this banking crisis, or it could happen if the Fed decides to go with 50 basis points at the March meeting on the 22nd, in the face, again, of this banking crisis. If you look at the FOMC watch tool, though, funny enough, the bond markets expect the Fed to stop raising rates pretty quickly. I think it's another 25 basis points, and then it's going to stop after this, is what the bond markets are telling us. So if you look at the CME group, there's a 82% chance of the 25 basis points, and then there's a 18% chance that they're not going to raise rates at all. Oh, this is the this is the March meeting, yeah. So there's a 18% chance that they're not going to raise rates at all for this meeting, is what the markets are telling us. And then if you look at the May meeting, they're expected to stay the same at 475 to 5. And then if we look at December, they're expected to cut rates from 475 all the way down to 400 to 425. So 325 basis point cuts by the end of the year after May is what the markets are telling us, which not really possible given that inflation is still sticking around. I think that the Fed is going to have to keep, hammering in the high interest or the high rate hikes, but we'll see what the markets say after the next Fed meeting on the 22nd. And to come with that, March 22nd Fed meeting, you're also going to get the summary of economic projections where the Fed gives their dot plot or where they expect rates to go by the end of the year. So that could, change all of this CME watch tool and the Fed futures altogether and shake up everything. So that's probably when you would get a circuit breaker. Not a day like today, I don't think. Zoom is down 43%. Oh, Zion. Yeah, there's a lot of stocks that are trading at new 52-week lows. I got like 10 notifications this morning on stocks that were trading at 52-week lows. But the two stocks that I'm watching for earnings this week, I think they're both reporting on Thursday or Wednesday and Thursday, Adobe and FedEx. So I still got a ways to wait until that. So I don't think I'll trade it yet. But yeah, dollar index is down by 0.7%. And SPY is coming down. So instead of, the dollar going up, meaning higher interest rates to fight off inflation, that would usually send stocks down. But now it's the reverse, where whenever the dollar goes down, stocks are coming down with it. So if you look at the dollar index, say back in the great financial crisis back in 2008, and we go to a monthly chart, let's see, 2008 was, so this is when they started to cut rates right here. The dollar ended up falling for the next couple of years from a high of 88 for the Dixie down to a low at $74. Right? So that is what happens whenever, the economy starts to go into a recession. The dollar will actually come down, which weighs negatively on stocks. So you have the fear of interest rate hikes, and then you have the fear of recession. And that, manipulates the dollar and stocks in whichever way. So now the correlation is basically 1-to-1 instead of the inverse for stocks and the dollar. Cocaine Bear is pleased with this market. It is definitely a wild market, to say the least. IWM is down 3% today, so usually IWM is a leader. This is the risk-on industry, the Russell 2000, so small caps. So usually this one will tell us where the markets are going next, and with this down 3% today, I think that QQQ has quite a bit of ways to fall, and then SPY would follow along. But not really seeing much now. We're down only 0.5% for QQQ. That's interesting that it's only down half. I think that one could be the easy short for today. It is trading relatively high too, comparatively to SPY and IWM. So maybe that could hedge my put credit spread for SPY that I have. I'll set the expiration date for tomorrow. 290 is going to pay me 40 cents of credit. That's a really good credit for 1-day expiration and trading 150 below it, so there's still, a decent chance that I end up taking my max loss for it, but I do have the put credit spread to hold me up. I think I'll take the 40 though. That's a really good credit, I think. And then let's see how much I would open. I would probably risk less on this one, just because it is a shorter expiration date, and there's no real telling what the CPI is going to come in tomorrow at. But I got 172 for 4 of them, so I actually got paid more than expected, which is good. Always nice to get paid more. So new options alert. This is a swing trade for tomorrow's CPI release. Just opened a new QQQ call credit spread expiring 3/14. Pi day, interesting enough, at 0.43 each. All right, and it's trading at 289, so it's basically right on that strike price, but my assumption is we probably won't end up holding it by tomorrow after the CPI release, if the CPI release comes in worse than expectations. You have some crazy balls if you trade options in this market. I think there's ways that you can trade it to minimize the risk, so I'm trading both ways in this market. So I've got my hedges on hedges. That way I can make money in any direction that the market decides to go in. VIX is pulling back to 641 from that 680 high. Actually, 713 at the high. Damn. That's crazy. But yeah. SPY is trading at 385 now, so that one's moving back up to that 386 level. So we'll see if we can hold this or not. KRE is still down by 12% this morning, 13%. Schwab is down by 16%. So I think with the banks down, that's just going to weigh down the rest of the market. But, we'll have to see. The 10-year is currently still at the lows. And then the 2-year I don't have the ticker for, but yeah, you're going to see a lot of volatility in both directions. That's something to note too, is volatility works in both directions, towards the upside and towards the downside. So you're going to see wild swings in both directions, especially intraday with the 0-day to expiration options. That's why I've been extending my expiration dates at least 1 day out. And then a lot of them have been a couple weeks out or even a month out with that SPY put debit spread that I have open. So extending your expiration date gives you a little bit more time for the markets to, move in your favor. So something to keep in mind. And then this gold leaps up by 100. I could sell a covered call against it, the poor man's covered call, but I'm hesitant on it for right now. I still think that gold has a ways to go up, especially if the recession fears start to kick in. Let's see, 210 spread. This was at 0.6% earlier, so we'll see if this changed, but I'm doubtful. Yeah, it was like negative 0.63. Now it's at negative 0.62. So not really much change at all, but the 210 going back up positive would be negative for the market. What time is CPI? I think it's at 8:30. Yeah, 290, 291, Donald. How much money is the Fed covering for each depositor? It's covering everything. Everything is being covered, is what they said. Yeah, but the CPI report should be coming out at 8:30 in the morning tomorrow. Economic calendar. President Biden is speaking currently, actually, about the SVB crisis. So maybe that's changing the market up and stuff, but I don't know how much effect he could have on the markets. Yeah, core CPI coming out at 8:30, regular CPI coming out at 8:30, and then you have real earnings, and then Fed Bowman speaking at 4:20 p.m. So Fed Bowman might have something to talk about now with the SVB stuff. I think that would be interesting if they had any comments and if they shifted the market sentiment from expecting no rate hikes to further rate hikes to come. That would be pretty chaotic for the market too. But again, I don't think we're going to get circuit breakers until either CPI comes in hot, meaning that we need to raise rates more, or if we get the Fed actually raising 50 basis points, or if they project that interest rates are still going to be going up towards the end of the year, where the bond market thinks that they're actually going to come down. The Fed futures think that they're going to come down by the end of the year. So if they scratch that sentiment, then that would be the circuit breaker event where SPY, I think the circuit breaker's at -7%, something like that. But we were only down like 2% the last few days, so really haven't seen much volatility yet. Not really much at all. All right, that call credit spread for QQQ isn't treating us too well right now. It's down by 20%. Luckily, I didn't risk a ton on it, so 20% is only $30, but I got that. Then I got the put credit spread for the 15th on SPY, assuming it's going to be above 380, and then finally that 380 put debit spread, assuming that it's going to be below 380 in April. Let's see. This one's still down by 16%. So haven't turned this one around to be positive just yet. IWM is actually making its way back up, though. It was down by 3%. Now it's only down by 1.3. So that one's managing its way back up. Looks like everything is recovering a decent bit this morning. But again, remember that volatility works in both directions. So this could just be volatility to the upside just to give it away later on. Like we saw this morning with the futures up 1.7%, and then we are down by 0.5% at market close or market open. But now we broke through the trend line, so we could be seeing some upside just based on the technicals. Just going to be trading around that trend line. Well, that's for the futures, but for SPY, it's actually still below. Even Boyle is up 10%. Jeez. Let's check it. Boyle. Yeah. Well, if the dollar is coming down, then oil should be going up, I would think. Let's see. Actually, oil is down by 3% today, so if we do go into a recession, then less oil is going to be consumed, which means that oil price would come down based on lower demand. So I guess that makes sense that oil would be down by 3%, down to 74 a barrel for Brent crude, and then the dollar index is down by 0.7%. Let's see if there's any recovery for the dollar right now. Not really much of one. Now, Q's is at 290. I'm still holding on to that call credit spread. Could possibly move the strike prices up to that 290, 290 level that I have. That could be a decent opportunity, but I'd rather keep my 290s. Should probably add gold to my macro watch list. Gold is actually pulling back. It was up 2%. Now it's up 1.4. So the gold leaps that I have is probably just breaking even. 391, 392 call credit spread down over 30%. Wonder if you should let it go. Let's see. If it's down by 30% and you're assuming SPY is going to be below 391, I would probably keep hold of that. I'm pretty doubtful that SPY would manage its way back up to 390. It's still below the trend line, and banks are still coming down this morning, so I would probably take the downside for SPY. I would probably hold on to that myself. $395, $396, you gave yourself a lot of cushion. A lot of cushion on that one. I might even turn my put credit spread into an iron condor if they're paying any decent. Let's check. So SPY's trading at 385 right now. So if I assume SPY's going to be between 380 and say 390 over the next couple of days, let's see how much I can get. I've already got paid 27 for these, and if we check on the 390 call credit spread for the 15th, same expiration date. That is paying another $37 of credit. Jesus. That is a lot of credit right now. Credit spreads are paying like hell. But that's also because of the heightened volatility. Again, volatility works in both directions, so it works towards the upside where we could see, a 1.7% pre-market or futures rally and then give all of that away by market open. So do beware if you do call credit spreads, put credit spreads that there's a reason for that higher pay. It is pretty tempting though. 27, and if I get say 35 out of this, I'm getting 62-cent credit for every $100 of collateral. So that means that I'm bringing my risk down quite significantly. I have 4 credit spreads. So if I did that, I would only be risking 4 times 40, basically $160. So I'd reduce my risk from around 75 times 4, $300 down to 40 times 4, 160. I would cut my risk in half, basically. That's not a bad idea. I think I'll take that, actually. It's going to be hard to hold. I would say that. You're going to see massive volatility in either direction, so could be hitting your strike prices pretty quickly, but getting paid a total of 60 plus credit for it, I'd say it's well worth the risk. didn't open the right amount. Let's see, 4.3. Looks like I'm gonna get it for a little bit less than what I want. $38 instead of the 40 that I wanted. All right. So I turned that put credit spread into an iron condor for Wednesday's expiration. New options alert. Swing trade. Premium. Just opened a new SPY call credit spread expiring for 315 at 39 each, maybe. Let's see. 156 over 4. Yeah, 39 each. All right. So basically what I did there was I turned my 380 put credit spread into a 380, 390 iron condor, assuming that it's going to be between those two strike prices on Wednesday the 15th. So doubled up on my credit, more than doubled up on the credit actually. Famous last words, it's not a bad idea. SPY below 380 today. I think it would hesitate at the 380 level for today. Maybe tomorrow. I think that could be possible depending on CPI. What am I buying right now? Call credit spreads for SPY, assuming it's going to be below 390. Not buying any stocks. Not worth it yet. Still, valuations are way too high to be buying stocks, in my opinion. Can I turn a credit spread into a debit spread? Oh, can I turn a credit or debit spread into an iron condor? Yes, you can. So what you do is basically all a iron condor is the combination of a call credit spread and a put credit spread. Well, a short iron condor is a call credit spread and a put credit spread. If it's a long iron condor, then it's a call debit spread plus a put debit spread. But basically, it's just the combination of both the calls and the puts. So I was assuming SPY would be above 380 with a 380, 379 put credit spread, and now I'm assuming SPY will be below 390 with a 390, 391 call credit spread. So basically, my assumption is that it's going to be between 380 and 390 with an iron condor, essentially. Yeah, you can. You can turn it into a iron condor later on. Yep. Iron condor is a put credit spread and a call credit spread combined, basically. No problem. Good morning. And you can also leg out of it too. So if I wanted to get out of the 380, 379 put credit spreads, I could do that independent of the call credit spreads at 390, 391. Fulgen is managing to be positive 1.5% today. I think it was down, God knows, like 5% on Friday, though. So just managing its way back up a little bit, not really much. VIX is still at 28, so still high. TLT bonds are getting bought up like I was talking about this morning, but it is actually pulling back from a high at 109 to currently 107. There's just a lot of volatility in bonds. Crazy, crazy volatility for sure. The Dow is up half. SPY's up 0.1. Dollar index is still headed down, so bonds are probably going to keep getting bid up. The 10 year's at 3.49, so below 3.5. Let's check with the 2-year rate. So the 2-year rate ended up topping at 5.05 or something like that. Let's check what it is now. 2-year Treasury yield. So now the 2-year Treasury yield, it's paying 4%. Whereas if you bought it just a few days ago, it was paying you 5%. That's pretty crazy. A 100 basis point drop in a matter of, 3 days? From 3.8, 3.9, 3.10, 3.13. That is a crazy drop for yields, bonds. Damn. Again, a lot of volatility in the bond market, so do beware. Does Robinhood recognize an iron condor and call it that? Yes. If you open them at the same time. If you open them separately, then it's just going to show you 2 credit spreads. Like I have. Gold is managing back up too. With the dollar coming down, that's going to send gold up, so still going to keep holding this bad boy. Yeah, the markets are just super choppy this morning, so playing 0 day to expiration options is going to be absolute hell if you decide to do that. I'm going to be trading at least 1 day expirations, and, the more time that I can get, the better. But now that the VIX is trading at 28, you are going to be paying a high dollar for those longer dated options finally. Whenever the VIX is going up, that means people are extending their expiration date to 30 days out instead of the 0 data expirations that everybody's been trading for the last few months since they got introduced back in November. What's a good trade for right now? I've got an iron condor for SPY, assuming 380 to 390 on Wednesday. That's what I've got, but I don't know if it's a good trade or not. Done with 0 data expiration. Honestly, I don't blame you. As choppy as the market is, it's very difficult to trade unless you're in and out of the trade within like 5-10 minutes. 6 to 9 days isn't bad either. I think that's pretty good. Pretty good time. I think if you're looking for a long-term trade, though, gold is a good position to be in. Bitcoin is at 23,000, so it's basically trading like gold is. Currently up by 3% for Bitcoin this morning. Whenever the dollar is going down, I guess Bitcoin trades like a commodity or like precious metals. So it is more risk on, I would say, than gold is. But with that risk on, you also get a higher beta. So you'll see, Bitcoin up 3% today, whereas gold is only up 2%. So you'll get that, extra kind of gain if it does hold on to that correlation with gold. How is Palantir doing? I know they bought a ton of gold reserves, so Palantir's actually up 4%. Jesus Christ. They ended up buying, I don't know, like a decent amount of gold. I forget how much exactly. But let's see. Palantir gold purchase. Buys gold bars. They spent $50.7 million on 100-ounce gold bars back in August of 2021, a hedge against a black swan event. So $50 million back in 2021, and now gold is up. Let's see, from August of 2021, that was, I guess they're slightly positive. Not as much as you would really expect from, holding it for 2 years, but definitely a decent hedge, I would say. That was a good position for them. Not sure if that's what's leading them up by 4% today or if it's something else, but definitely interesting. Getting into Riot. Yeah, Riot could be okay. The gold, or not gold miners, but the crypto miners could be in an okay position if people start piling into those. And then you have the Bitcoin halving or whatever. I think it's next year, right? 2024. So people might be starting to buy in, and the hopes of the rally for the halving, that could always happen. So maybe the crypto winter is over now that all the banks are getting screwed. Any events that you predicted the cause if the surge for gold? So the reason why I piled into gold wasn't because of this banking crisis. The reason why I piled into gold is because it tends to outperform in recessions, right? If you look at the gold, say back in 2008, right? Way back here. Let's see. This is the quarterly chart. Let me pull up the monthly chart, and we can compare this to SPY. Let me stack it up and down. Get rid of the studies. SPY. All right. So if we're looking at the max by quarterly chart, I want to change this to max by monthly so it'll give us a better picture. Quarterly, I just feel like is too long of a candle to look at. So we go to the monthly chart back in 2008. Let's start at in January of 2007 and go to 2011, that 4-year time frame that we were in that recession, right? So SPY basically traded flat in this 4-year time frame, whereas if we look at gold on the other hand, from 2007, January 07 to January 2011, this one is obviously positive. Starting at 63, going all the way, doubling basically to 127, whereas SPY was slightly negative and almost neutral. So gold is going to outperform during a recession, whereas stocks are obviously going to underperform as the companies are getting less earnings per share because people don't have as much money to spend on discretionaries, especially with the inflation bout that we're having. It's just going to diminish earnings, while our valuations that we have for companies are extremely high. So if you look at like price to earnings growth ratio, or just regular price to earnings, we're extremely high for the S&P. Let's check You can look at, say, the Shiller's PE, S&P PE ratio. I'm not sure if this is going to give us a chart or not. But if we look at, say, the maximum chart going back to 1800s, look how high this is relative to history. This is about as high as it was ever since 2008, before the 2008 crash, and then as high as it was back in 2000. So the valuations right now are still absurdly high. Earnings are going to be coming down because of recession and inflation. So those valuations have to come down in order to, not really match history, but at least reflect the upcoming earnings recession. But we haven't seen that yet. Sell some cover calls maybe on Riot. Yeah, I think that you could get some decent premiums out of the gold miners. I think that might be a okay idea. SPY's at 384 now. The VIX is back up to 29. 10 years still at 3.5. 10 year really hasn't moved much at all this morning. And then that dollar index, I think, is still managing its way down, currently at 103.80. Let me fix the charts to where I have just one chart. We're done with the comparison of gold and SPY for that 4-year time frame. Ooh, Redfin is down by 10% today. I wonder how much Zillow is down. I've been wanting to short Zillow shares for... It's only down 1.4% today. How is Redfin down 10% where Zillow is only down 1%? Something is up with this stock. Huh. I'm really tempted to go short on Zillow. But this one is just holding for some reason. I don't know why, but... But if you look at Redfin, RDFN is the ticker. This one, this one's actually up 10% today. How the hell is this up by 10%? Oh, I guess with the mortgage rate drop. If we are seeing a drop in the mortgage rates, that would increase the amount of demand that there is for housing. So maybe Redfin and Zillow could actually do okay. Let's see. Let's check the 30-year mortgage current. This one's still saying 7%. The Fed is saying 6.73 as of the 9th. I don't know what it is right now, today. I'd imagine that mortgage rates would be coming down a little bit, though. This morning, let's see. Yeah, the rates are definitely easing. The average rate today is saying 7.02, so it really hasn't dropped much, I guess, as of this morning. Odd. Alright, it's at 6.7. So I guess it has dropped from that 7% mark, that 7 handle. It is coming down. Based on your research, would you say you've seen more than enough signs to say a recession is coming? I think that the recession is likely. Extremely likely, unless the Fed decides to let inflation ride at 5 to 8%, which, considering the way that they've been talking since they got rid of the transitory statement, I think that they are gung-ho on getting rid of inflation with the higher interest rates, which is inevitably going to cause a recession. I think that the main thing that you need to look at is the spread between the 2-year and the 10-year yield. Once that goes positive, that's usually when the recession starts. And I still think that we have probably another 6 months at least until the recession. My guess is it's probably going to take 6 to 18 months, and that's just based on the lag effect of interest rate hikes. It takes about 9 months to 12 months in order for the effects of interest rate hikes to be felt in the economy. So right now, we're just now starting to feel the first interest rate hikes, which were back in March of last year, right? So we're just starting to feel those. And now, you have that 4.5% on top of that, which is going to cause more pain in the next 6 months. Any analysis for tomorrow's CPI data? I think that it's going to come in higher than expected, based on the producer price index, or the PPI, coming in hot. I think that there is a higher chance that it's going to come in above the 6% that the markets expect, which would probably make the markets come down based on the higher interest rates and the Fed continuing to hike in the face of this banking crisis. So I think it would be negative, but I'm also trading both ways, right? You saw the call credit spread that I opened this morning for both QQQ, for SPY, and then I have that put credit spread expiring for Wednesday on the opposite side. So I'm playing it both ways just to kind of hedge myself in case I'm wrong, which I would always suggest, always hedging your positions, having multiple directions, right? So I have 2 bearish trades for QQQ, SPY, and then I have a bullish trade for SPY, and then I have another bearish trade expiring in a month from now. Do I trade any different in a recession? I would say no, but I would say that probably going to be making more money. Usually whenever volatility goes up, that's when I make my bank, right? So if the volatility of the VIX index can hold this, 25 and above level, that's usually when I make my best money. Right now, my account's up at 32,000. Last week it was trading at 29,600. So over the last week, the account's up by 900 based on starting at 31,000. But from the lows, this is up by $2,000 basically. So usually whenever volatility is going up, that's when I make my bank. So I'm all for it. I'm a volatility and event-based trader, so the more volatility, the better for me. Because again, I played in both directions. So use Robinhood like you. Do you know of the margin account for 25,000 to day trade? Yes, you need 25,000 if you want to day trade more than 3 times a week. When does the USDC take over the Federal Reserve notes as currency? Oh, God. I don't know why. The Fed really should do that. They should just have one of the stable coins and, take over one of the stable coins instead of making their own CBDC. But I don't know. I don't know how they would really manage that. I mean, you have the Fed led by a bunch of, people that really don't know much about cryptocurrency at all. So couldn't really trust them to really manage that, in my opinion. But if they can hire some younger folks that have been in developing blockchain and stuff, I think they could manage it. But I don't know if our younger generation really wants to work for the Fed and the government and shit like that, considering how poorly they've been viewed over the last 10 years. Do you see small bank stocks holding up this next week? I don't think so. Because the thing is, the people that are holding the money in the accounts, they're the ones getting bailed out. It's not the executives. It's not the shareholders. It's not even the bondholders of the banks. It's the people that have their deposits in the banks that are getting bailed out. So I still think that small banks, KRE, the regional bank ETFs, could still get hammered. Won't credit spreads have a better risk reward? Yes, they will have a risk reward, but there's a reason why you're getting that better risk reward ratio. It's because it's less likely to work out. When did I start trading options? I started trading options back in March of 2020. So I've been trading just regular stocks since 2016, I want to say, when I was going to college at the time. Then I dropped out of college in March of 2020 and started trading options basically every single day ever since then. So 3 years now, 6 years trading regular stocks. ISO 2022 is an open global standard for financial information, provides consistent, rich, structured data that can be used for any kind of financial business transaction. But yeah, markets are going to see a lot of volatility in both directions, so just beware if you're taking on any options positions. You should be in and out of them pretty quickly, I would say, too. That's how you can kind of manage with the volatility, is getting in and out of your positions pretty quick. That way, you don't take any major losses. The call credit spread that I got for QQQ below 290 is still negative. That's okay. Seems like the 10-year is just frozen at 3.498. It's like they halted the 10-year. I know they didn't, but it's just been around that mark for so long. With as much volatility as we're seeing in the bond market, you would expect some change, but not really seeing much at all. Could I do a quick recap of the trades and hedges that I opened for CPI? Yeah, sure. So I have 3 trades for CPI tomorrow. 2 that are expiring for Wednesday. I have a put credit spread assuming SPY is going to be above 380. So I sold the 380 put. I bought the 379 put. I think I opened this on Friday of last week. And then this morning, I opened this 390, 391 call credit spread, assuming SPY is going to be below 390 by selling the 390 strike price and buying the 391. So these are both expiring for Wednesday, the day after the CPI release. And then also this morning, I ended up opening a 290, 291 QQQ call credit spread, expiring tomorrow, assuming that inflation is going to come in higher than expectations because of the producer price index coming in hot. So my assumption is that it's going to be below 290. So I sold the 290, bought the 291 call. So those are my 3 trades for CPI tomorrow. And then I also have the put debit spreads with the 421 expiration. So those still have a long ways to go. Even after the CPI release tomorrow, I have another month, 5 weeks until these expire. So I could wait until the Fed meeting on the 22nd, and that could turn the markets around and turn these profitable. What's a Form 424 B2? I'm not sure about that. You can day trade it 3 times a week under 25. You can if you have a cash account, but if you have a margin account, you can only do 3 trades a week for 25K. And then if you have a margin account, you can only do 3, and that's it. And you need a margin account in order to trade spread options. So if you want to day trade spreads, then you need that 25,000 mark if you want to do it more than 3 times a week. Let's see, 424 B2. Prospectus form that a company must file if it is making a primary offering of securities. So yeah, on a delayed basis. So basically they're doing a share offering is what it sounds like. But they're not doing it right away. It's going to be later on. Yeah, no problem, done. And I think that's all the trades that I got for y'all today. I'm going to wait till Thursday for or I guess probably tomorrow for my earnings trades for FedEx and Adobe. I will go over what I'm planning, though. If we go to my Notion page, if y'all watch my video that I posted yesterday. So for Adobe, their expected earnings per share is $368. If they do better than that, and if they beat their revenue at $4.62 billion, I think this could go above $340. Right now, Adobe is trading at $328, so it's another $12 to the upside, or about 4%. If we look at beat on earnings, miss on revenue, it's probably going to stay above $320, which is about $8 below where we're trading right now. We're about 3% drop. And then if they miss on earnings, beat on revenue, I think it's going to stay above $315. And finally, miss on earnings, miss on revenue, would go below $310. And then for FedEx, expected range is $13 either direction. If they beat earnings, beat revenue, above $205. Beat earnings, miss revenue, above $198. Miss earnings, beat revenue, above $195, and miss earnings, miss revenue, $190 is the mark that I would look for. Currently, FedEx is trading down 2% today at $196. So, I think we could maybe take the $195 put credit spread, or even a $198 call debit spread, maybe. Let's see. Their earnings is scheduled, I think, for Wednesday. Let me check. 3/16. Today's the 13th, so that'll actually be Thursday. So we'd set the expiration for the week after. I don't know. Not sure how I'm feeling about FedEx earnings. I would think that they would do okay. Given that it's holiday season, they would probably do more deliveries. So, yeah, I think above 198 could be a decent trade. Let me see how much those are going for. If they're going for too much, I won't take it, but could be an okay opportunity since they're down 2.5% today. If we assume they're going to be above 198, which we would have to choose the 197.5 strike price, actually, we're paying 170. That's the ask price. 170. The bid is 95. So I'd have to check Aries for the bid ask. a better bid-ask spread. Let's see. Trade Aries. Maybe I can start taking money out of my Robinhood to put it into Aries so I can trade with that. Especially since I'm not doing day trades anymore. Let's see. If we go to FedEx. Options. Next week's expiration. Buy the 195, sell the 197.50 for a call debit spread. Saying 130 for the bid and the ask. So you're paying 130 to make 120. So about a 1-to-1 risk reward ratio. It only has to go up by $1 from where it's trading right now. So that could be an okay opportunity. Looks like we might have to pay a little bit more. Actually, it's 140 now instead of 130. So you pay 140 to make 110. That's not as good. Let's see. I think the most I'd be willing to pay is 135 to make 115. And I got filled at 135, so I'll take it. And that's all I'm going to spend on it. I'm not going to spend a lot, especially with the volatility right now. Not worth it to spend a ton on earnings plays. Swing trade. Premium members. Just opened a new FedEx call debit spread expiring next Friday, which is the 24th. And I got him at 135. All right. Sweet. Got that position, and that's the last position I'm opening for today. Let me log all my trades in the spreadsheet. If y'all want access to the spreadsheet, sign up for the premium Discord linked in the pinned comment for the live session. And I will finish up here. March calendar. No, I want the log. So I made, I think, 3 trades this morning. Let's see. Yeah. 3 trades. QQQ. SPY. And FedEx. Call credit. It's a bearish neutral trade. SPY put or call credit is also same thing, so I can just copy and paste. 315 expiration. This one's 314 expiration, and then FedEx is next week's call debit spread, which is a bullish trade, and this expires for the 24th. All right. So for QQQ, I'm assuming it's going to be below 291, so I bought the 291, 290. 4 of these, and then for SPY I opened 4 391, 390, 4 of these, and then for FedEx 195, 197.5. Just one of them. 135. Open the SPY for 39, and the Qs for 43. All right, so that's the 3 new trades for today. And that's all I got for y'all. So I will catch y'all tomorrow morning at 9:30, and we'll see how the markets go between now and then. Good morning, Al-Qaeda. Taking risks, but it could fail to zero. Yeah, that's the thing about options and why you shouldn't risk too much. Never risk more than you're willing to lose. Bought puts for Schwab, getting scared. Let's see, for Schwab, they were down, 11-12% this morning, and now they're down 16, so still down a shit ton. I wouldn't be too worried about that position. Do I think CPI could be cooler than expected because Biden said it? I think that's possible. I mean, it's the government agencies that are the ones that are doing it, so it's hard to say. They could be manipulating the data. They have been manipulating the data, I feel like, with CPI saying that it's only 6% when food prices are up 20%. I think is ridiculous. People are paying way more at the pump. Well, I guess gas prices have actually come down a good bit, from $4 a gallon to $3.50 now. So there's some parts of the CPI that have come down, but overall people are spending a lot more money on inflation than they were before. So I think the data is a little bit skewed, but it is what it is. We trade around it. But yeah, catch y'all tomorrow for CPI. See you, everybody.